Sunday, the 5th of May 2019. I think it's 6 weeks since I last did a video on the ASX gold stocks. And since we just had the quarterly reporting season, I thought it would be a good time to do a bit of an update. The order of stocks here is similar to what I had last time, fairly random, sort of hodgepodge. First one is St. Barbara. That's struggled again, sort of been trending down with the rest of the gold stocks, I guess. After I think the last video is just after this, they had the announcement about the Gwalia feasibility study and their long-term options looking a bit sort of questionable and a lot of doubt in the market and technical risk. I guess the thing I pointed out then was that when I've seen this sort of action before, it's generally stocks don't rebound on that sort of technical risk because it's while the pressure remains, people aren't willing to buy it. And I think just with the market sentiment being a little bit weak in the gold stocks at the moment, that's sort of weighed on it further. So it's heading down toward a bit of a previous support zone here, previously sort of a resistance zone around this $3 level. I remember holding it holding it a few times in this period and waiting for that area to break through. So potentially you could see some support there, but I'm not overly optimistic, and I think it's not really worth buying that until that sort of technical risk is a bit less than it is still in the eyes of the market. Regis, I think I didn't read their last quarterly report actually. I think it might be one of the first time I haven't read their quarterly in a while. I think it seemed to be in line with expectations. I did read an article about this the McPhillamy study. That project's been delayed a lot, and there's been issues with water purchases, and just the general where they're going to get their water for the project. And we've been sort of 18 months in this feasibility study now. I think it's been a bit of a problem for them, and that's sort of weighing on the stock, I think. And I don't think it was the production numbers that saw this. You can see there it's dropped fairly heavily in the last couple of days. So I think there's something in that quarterly they haven't quite got a handle on yet. You can see there it's sort of flirting with this long-term trend line that it's been in since 2015. So I'm not sure what their options are there at the McPhillamy's project in terms of that water and how serious those issues are with the local community and stuff, and whether they can actually get this project off the ground. They did also try and buy out Capricorn Metals as well, which I'll talk about in a minute separately. But that's a sort of questioning their McPhillamy's project, I guess. So maybe that's what's causing this uncertainty. The last couple of days had a fairly steep fall, down about 12% in the last 3 days. So that's pretty significant fall. Saracen, next one, I think their quarterly was quite good. I did try and buy the stock a day or two afterward. I think I tried to buy it on this day here, and my order missed by 1 or 2 cents on the open, which was kind of frustrating, but that's how it goes. It's probably been a decent buy, I thought, at that high 250s, sort of early 260s level, and probably will be one. I think it looks like they're going to outperform some of the other peer stocks who are maybe sort of having their growth outlook questioned a bit by the market. Northern Star was probably the main one in that category. I've talked about the Pogo acquisition a few times, and this, particularly when it burst out, opened up sort of 10% when they bought that mine, and it's really, you can see I've got these sort of trend lines here. It's sort of amazing how it does tend to obey these quite well. Not that it's, at some point they were gonna break, but this one here, it looks like we're sort of flirting with, we're outside that last one now, which coincidentally I think happened when they released the quarterly. But you can see here they've really got one more chance, I think, with Pogo. I think I did download that as well. So obviously they had very high costs there in the last quarter. I think it was, where are we here? So Pogo's at all-in sustaining cost $2,000 Australian, so almost 1,500 US. They are changing the mining method, buying a lot of new equipment, but the question is whether that's. I think the market really sort of given them a bit of a sort of a last chance now, and if that doesn't really change in the next quarter, then they're going to be in trouble. And I think you could see the share price fall because the other operations are not hitting it out of the park other than Jundee, but the Kalgoorlie mines are still sort of, they've had a steady increase in costs for the last probably 1 or 2 years now, and they did add on I think the South Kalgoorlie operation as well. So, and that was a fairly high cost operation, so that sort of bumped up the average, but it's not they're not stellar operations. So if Pogo's keeps dragging it down, I think the market darling status that Northern Star's had for the last 2 or 3 years might be questioned. So, and people might take their money out of the company. So I still don't want to own it here. It looks like it's sort of undergoing quite a sort of hefty topping pattern here. And I think they're overvalued stock compared to some of the others in the market who've probably got slightly better growth prospects. So I've sort of avoided it for a while. Perseus is an interesting one. I was pretty skeptical of I've been in and out of the stock for a long time, probably know it better than a lot of the other gold stocks. They had quite a good quarterly that came out that surprised me, where they showed quite a dramatic shortfall in the costs as well. So Edikan came down to $900 an ounce last quarter, and that was sort of down from sort of 1200 previously, and that reflected a change in the mining method, I think, a change in the mine plan, shall we say, and that's looking like it's going to be sustainable. I think their mining costs came down significantly. If I can find so you can see there the unit costs were down from $4 a ton roughly to $3 a ton mined. So I think that's probably going to be sustainable that was sort of the main thing that I was worried about with the stock. But with that in mind, even if they're sort of only at that 60 to 70,000 ounces, they'll be pumping out good cash flow, and they've got the debt facility as well for the Yaouré deposit in Côte d'Ivoire. So that should, that's a bit of a growth prospect as well. So I think the stocks, it's been at this 45 sort of level for a while because that was where the warrants were convertible at. So that they've got that out of the way now. They had to get it underwritten, so you could see a little bit of overhang there for a while. But I think that with Edikan sort of ticking along okay now, unless there's any problems which they have been prone to. But I think with the costs generally sort of lower than they have been in the past, that's a good sign for me, and I think that Perseus is probably a decent buying opportunity if the gold price starts moving again. I think some of that risk is diminished from the stock now, and I think it'll trend well with the gold price. So I've been sort of in and out and pretty bearish at times on the company, but I think it's in a decent position now from a risk reward perspective if you want something that's just a leverage play on the gold price. Ramelius, I talked about this in the last update. I said I'd sold out, so I'd bought it in at 50 cents, I think in here, and I'd been started selling probably about 75 and sold all the way up to sort of 86. And that was when I sold my last parcel, which happened to be just at the last video I did. And I said I thought the stock had was definitely overheated, so it's now fallen back. I thought their quarterly report was quite good. They've got good guidance for next year as well, looking at 230 to 250,000 ounces. Starting to hit some pretty good exploration results as well. So they've got these growth projects. So I do like the company at sub 70 cents. I think it's a good buy, and I probably would look at purchasing that if it gets there in the next couple of days. So, but I thought at 85 cents it was getting overdone. But I like they've got a good growth outlook now, and they seem to be pretty well run company. Gold Road their quarterly's not producing yet, so not a lot to say. I had been selling some of the stocks sort of on the move up to, between 90 cents and $1. I'd sold some, so I've sort of sold out a lot of my position that I'd accumulated sort of in this 50 to 65 cents I'd been buying for 6 months toward the end of last year. And that's how I like to play it. I like to sort of buy it there, wait for the move, especially with these pre-production companies, and then wait for the big money to come in, and that's when I'm going to exit, and then I'll hold some. But I'm still not, I think at $1 the stock was extremely, well valued, I guess, and there's probably not a huge amount of upside from there, and still quite a considerable risk going into production. So it's shown pretty good strength. One thing to look for, and it's in a down market, or it's only a mildly down market for gold stocks, but companies that are sort of outperforming their peers are probably going to do best on the next run. And it looks like Gold Road's probably holding its own very well here. So I think it's probably poised for another move up above $1, and we'll see where it goes from there. But I'm sort of inclined to sell the rest of my portion, if my rest of my shares, if it went up to $1.05, $1.10. It's just not worth it for me. The potential risk still in the stock. Dacian's been a big underperformer. I've been disappointed with their quarterly. I think the last video I did was just before they announced the production downgrade from Mount Morgan's, and then when the actual quarterly came out, they were below the previous downgrade forecast. So even in the last 3 or 4 weeks, they missed the lower end. So you expect them to be able to hit a target when they're only sort of 3 weeks from the end of the quarter, but they're still guiding toward a June figure of 50 to 55,000 ounces there at about 1,100 Australian all-in sustaining costs. So if they hit that number, I think the stock will bounce back. But there's a lot of questions on the stock. They did hit very good tonnages out in March. You can see there 120,000 tons, which is above the feasibility targets, where they only need to get sort of 100,000 tons a month, or even a bit less, I think. So it was grade related, and if the grades aren't up to scratch there, that's a real problem for sort of longer term. But if they hit this number, the stock will rebound. But it's a matter of kind of faith at the moment. I've tried digging into as much as I can in the data, in the production data, and there's a few sort of things in there. Particularly this 2% from Allinson's of the ore feed was a bit of a question mark for me, since that was really touted as being a heavy focus for the last couple of quarters of this financial year. So that concerned me a bit, and I think that was related to their equipment availability issues, which was what they caused the production downgrade. But there's just a few too many question marks, I guess. So I'm not inclined to buy any more stock at this point. But I think it's still very good value if you believe they'll hit those forecasts, because I think it is a mine of scale that there's not many of. You can Gold Road's trading at an $800 million market cap. So if Dacian's at 400 million, or it's 500 million, say, enterprise value with their debt, but I think that's still pretty good value compared to, say, Gold Road, or something like the larger developed producers like Saracen. So I think Dacian's still well positioned if they can hit those numbers. Obviously, you got to have a bit of faith at this point, and I don't like to rely on faith. So I'll be watching very closely. West African Resources, WAF's been one of my sort of picks for a while. I like that they're sort of outperforming in this down market. Had a big surge in sort of a good, nice run in March, and then had it fallen back a little bit in the last couple of weeks, but had a nice couple of days toward the end of last week. And I think they did release their production, their feasibility update, saying they're going to get to 300,000 ounces in the first year, and increase the mine life by another 200,000 ounces, I think, roughly. So it's a very high quality project, and I think if money starts to come into the sector, it's going to go to the cream first, and I still think they're a takeover target. Like everyone does, it's pretty obvious that this project isn't something that's usually taken on by a small company. Once you get above to the certain size, it starts to look attractive for the bigger mining companies, the mid tiers, and those companies are looking for projects. So I think eventually they'll go to West Africa, but in the meantime, they seem to be doing a good job. They seem to be well cashed up now with drawing down the debts, and hopefully they can start delivering some new exploration results as well, maybe toward the end of the year when they reach the underground, if they start drilling and add some more mine life of the underground at M1 South, that's really will add some more cream. But I think it's just a hold stock now and wait for the it's going to move with the gold price a bit more. And if some of the speculative juices start going in the gold market, if the gold price starts moving, I think money will start to move to the quality projects, and that's where I think WAF sits. A couple of the others that are getting toward the end here. Echo is a stock that I like. I do like the sort of the theme of, I guess, Australian dollar gold. And Echo's obviously they've got a processing plant ready to go, and sort of a low capex option to get their project off the ground. So they'll sort of being able to take advantage of a high Australian dollar gold price. They've had a bit of a weak period after a good run in sort of February and March, and they've come back down, had to do another capital raising, which I think is for 15 million, which is a nice figure, and will allow them to do more drilling. Obviously they've done a lot of capital raisings over the years, and sort of I think people are getting a bit disillusioned with them. But I do like that theme of Australian dollar gold. I think there's potential for some pretty explosive action there, up to say $2,000 an ounce. And I think you got to have a bit of exposure in these stocks, because I think it'll pay off at some point. Obviously, it's hard to hold when they keep raising capital. That was kind of a function of the capital raising they did in December was at really low prices. They're sort of at the mercy of the market a bit, I guess. But now they seem to be well cashed. They'll be well cashed up after this raising, so they'll be able to really get drilling, and I think that's probably where their strength is. And I expect that they've got some pretty good targets, and I expect they'll probably start and hit some good results, and that will get the market a bit more excited. And hopefully, in the meantime, the Australian dollar gold price starts to move a bit, and they can add mine life to their project, and then it becomes a good project. I mean, there's always the risk here that if you try and rush ahead with a project too quickly, they probably can get finance for the project, but that doesn't mean they should necessarily build it. We've seen a lot of companies struggling. Almost every company that's gone into production has struggled to get production numbers to their feasibility targets. So you've really got to be sure that you're doing the right thing, and I know shareholders get a bit impatient, but it's that trade-off between rushing ahead with something that's is not going to work, or have doubts that it's going to work anyway, or waiting for a better environment to get the project off the ground when you've got a lot more when the technical uncertainty sort of at a lower level. So I still like them. The other one is Capricorn Metals, is just finishing up their capital raising. I talked about how I sort of, in the last video, I didn't really like all the sort of corporate action that was happening, in the sense that there was sort of boardroom game stuff going on. They've completed the raising now, which was done at 6.5 cents. So stock seems to be holding these levels fairly well. So there's not a lot of people looking to really cash in on the short term delta between the raising price and the current price, which is it's a solid 20 or 30% higher than the raising price at the moment. So that probably means that people are expecting that offer to come at higher levels. As I said, Regis has been interested, and particularly if they've got problems with their McPhillamys deposit, you might see them come back. I think that's what everyone's kind of waiting here. They had another offer as well from I think from EMR, Emerald Resources as well. So that's just another play on the gold price, on the Australian dollar gold price as well. Final stock was Cardinal. It's a stock I've been talking about for a long time. Sort of been tracking sideways. Had a nice little bounce on some news about their feasibility study now coming in at the end of the quarter, end of the current quarter, so by June, and that caused the stock to shoot up about 15% in a day. But sort of holding those levels fairly well since then, but still no interest in the company. Had a bit of a sort of a sell down the other day on sort of light. It was on heavy volume, but most of that volume was, I think, at 41, 42 cents. So it was sold down on light volume, which is really what can happen to this stock, because there's nothing. It trades on average. It's trading at about 100 120, 150,000, 200,000 shares there maybe in the last couple of weeks. So it's nothing. It's 50 grand a day, 50 to 100 grand a day. But that's another play on just on the gold price, on that exploration theme, I guess, and project development, that those bigger companies are eventually going to have to come after some of these big projects that are significant ounces in the ground, which is 5 million ounces they have. So I've done plenty of videos in that one in the past, so I think my views are pretty clear, but it's just sort of a long-term hold. So that's where I sit at the moment, and I'll probably do another update in 6 weeks on sort of some of those stocks when there's a bit of new information and stuff to talk about.